What up? This is Ryan Courtney with Payne Capital Management for your weekly Money in Minutes. Court, last week we talked about cash is trash, right?
It is.
Yeah, very bad to keep your money in cash because you're getting 0.001%, which is not a great return. And if you look at just investing your money in the market for the last 15 years, you would have made 96% on your money over a 15-year period. That's not bad, right?
It's not bad at all.
So Courtney, why aren't people investing their money?
Yeah. So I think when it comes to the stock markets, a lot of people are very nervous. I don't know if you've seen this lately, but especially over the last 15 years, there has been 2 large major corrections, and It's left a lot of people pretty bitter. It's left a lot of people pretty nervous, and they're saying, well, why would I ever invest my money when I've already been through 2 bad experiences?
Yeah, it's just kind of like a roller coaster ride.
Exactly.
It's like if I keep my money in cash, it's safe, right? But if I put money in the market, I'm going to see literally like up and downs, like my favorite ride, A Great Adventure, which doesn't sound like a great place to put your money. However, the returns have been good over time, but who wants to deal with that roller coaster ride if you don't have to, right?
I think anyone does.
Yeah, agreed.
Yeah.
So what do? If you're sitting in cash, you're getting no return, you put your money in the market, it's a roller coaster ride. What's the best alternative?
Yeah. So really, when it comes to your money in the market, we really like to talk about diversified strategy. And this fancy term there, but all it means really simply is you don't want to have all your eggs in one basket. You don't want to just invest in those big US companies that we all know of, those big brand names. You want to own a little bit of everything, your foreign companies, your small companies, things like energy, things like real estate. You want to own the entire gamut because oddly enough, it ends up being a more conservative strategy, but you actually do better in the long run, don't you?
Yeah, exactly. So what you're saying is by having money in U.S. stocks, having money in international stocks, having in our portfolio, having money in commodities, having money in real estate, having money in bonds, by putting all those things together, it's kind of like if you had a farm, and maybe if I'm hearing you right, Courtney, and I planted all these different crops, but these crops actually came into harvest at different times. And check out if I would have done that for the last 15 years. So if you put your money into the S&P 500 or the quote-unquote market, like I said, you would have made 96% over the last 15 years had you put it into a diversified strategy. And look at the difference in volatility. Not only were the returns better, but you also had a return of 182% over the same time frame, basically double.
Yeah, it's not bad.
Sounds like a pretty good deal to me.
Can't really refuse that.
An offer you can't refuse. So to sum it up, your money can't be sitting in cash. You're getting no return. Your best alternative is not just put your money in the market, but put your money or invest your money into a diversified portfolio so that you can achieve long-term returns, have your money grow over inflation. It's important. You need to do it today and be bullish.